Meet Samantha. Samantha is a first-year business student at UTS, currently studying Accounting for Business Decisions A. She is attractive, intelligent, and extremely popular. Well, 12 weeks have passed and this is Sam now. It is a week before her final and she does not know anything about accounting. Well, the first thing Sam needs to know is the concept of credit and debits under journal entries. What is a journal entry? It is basically a chronological record of transactions. Entries recorded in the journal are called, yep, you guessed it, journal entries. There are 3 steps that must be satisfied before entries can be recorded into the journal. Step 1. We must firstly identify what accounts are being affected and how. For example, Fiona contributed an additional $12,000 into the business. In this example, what is being affected? Obviously, the cash account. Because if she is adding 12 grand worth of cash into the business, then the business would have an additional $12,000. What else is being affected? Well, contributed equity is the other account which is being affected. Step 2. What debit and credit entries are required? This step is where it can get a little confusing. In order to identify what the debit and credit entries are, we must first understand how debiting and crediting can affect an account. The fundamental thing we must know is that the debit side is on the left and the credit side is on the right of the account. Secondly, there are 2 main types of accounts, the asset account and the liability and equity account. Assets are basically property owned by a person or company which is regarded as having value. This includes cash, inventory, land, and supplies. In an asset account, you must record increases on the debit side and decreases on the credit side. Liabilities and equity accounts include accounts payable, owner's equity, and ordinary shares. Contrastingly, in the liability and equity account, decreases are recorded on the debit side and increases are recorded on the credit side. In the example, since cash, which is an asset, is increasing by $12,000, the cash account must be debited by $12,000, and contributed equity is increasing by $12,000 also, so we must credit it. The final step in recording journal entries is to record the journal entry. When recording the journal entry, you must make sure the adjustments must balance. This means if you debit one side, you must credit another. The journal record must be set out as shown here. In the example, the account being debited, being cash, must be shown first, and the account being credited, contributed equity, is shown second. Well, just look at that. Samantha learned how to record journal entries and passed her finals. Now that she's got her degree, it's time we get down to some real business.
Oh yeah.